Hey guys, this is Sandy. I'm a licensed realtor here in the Central Florida area. Today I want to do a video for you on what is the difference between a 15-year mortgage and a 30-year mortgage. I'm a licensed realtor and also a licensed loan originator, so I kind of have a little bit of knowledge in this department. Let's get into it. So most people, when they're going to buy a home, they're going to have the question of, do we want a 15-year mortgage or a 30-year mortgage? Some of their maybe relatives, friends, lenders, whoever it is going to probably tell you the difference why you should do a 15-year versus a 30-year. Now, a 30-year loan mortgage is more popular, and most people do go for a 30-year, especially if they're doing FHA or VA loan financing, while others that are doing conventional loans may opt for a 15-year. Maybe an investor or someone buying a second home may go for a 15-year mortgage, or maybe someone buying their first home but they have a lot of down payment, they may opt to do a 15-year loan. So what is the difference? What are they? So it's kind of self-explanatory, meaning a 15-year mortgage is you have 15 years to pay the mortgage off, whereas with a 30-year, you have 30 years to pay the mortgage off. So obviously with the 15-year, you have less amortization, which means the loan is spread out over less years, as opposed to the 30-year that gives you more amortization because it's spread out more. So what are some of the pros of getting a 15-year mortgage? You have most lenders like when a loan has a shorter risk, so you have a shorter time frame to pay it off, so it's a little bit less riskier in the eyes of a lot of lenders. They may give you a lower interest rate, maybe a quarter point up to 1 point lower in interest rate because it's a 15-year mortgage. You will have higher monthly payment. So one of the cons is you're going to have a higher monthly payment because it's amortized less, it's amortizing off. So the payment you'll have for a 30-year would be twice as much when you do a 15-year mortgage. You then would be able to afford less home because your debt to income ratio is going to be higher, and this is going to have a lot to do with your income. Maybe your income could cover it, but your debt to income ratio would be higher if you're paying the loan off in less time. Then you're going to have twice as much monthly payment. So that will then probably put you in the bracket of being able to afford less home. And this is a lot to do with the down payment you're coming up with as well and what you qualify for. But for the basic step, you might not be able to qualify for a higher price home since you're only doing 15 years in the mortgage. Also, you will have less cash reserves, right? So based upon your income and what your financial situation is, you're going to be paying twice as much monthly mortgage payment, even though you're paying down the house faster. So then you're going to have less cash reserves, as opposed to if you had a 30-year, the mortgage would probably be off of whatever you're paying. Not all the time. We're just saying this as a basic step. Now, when it comes to a 30-year mortgage, you have lower payments because the mortgage is spread out over a 30-year period. You have a little bit more flexibility. You probably could buy more home because you're spreading the payment out over the course of 30 years as opposed to 15 years.
Need to buy or sell fast? Make one call, that's all. And put our 23 years of experience to work for you. Gift Group Sells Homes is the way to go. Call for 07-791-4713.
You'll have a bigger mortgage interest deduction. And what that means is when you do a 30-year mortgage, you're obviously going to be paying more interest, but most of the payments for the first few years of the mortgage is mostly interest you're paying and not too much of the principal. So that means at the end of the year, you're able to write off in the US, you're able to write off your the mortgage interest that you're paying. So you'll have a bigger write-off on a 30-year mortgage if that's something that you want to do, as opposed to a 15-year. A 15-year, you're still going to have mortgage interest, but not as much, because with a 15-year, you're going to be paying not as much interest and more principal, based upon how the loan is structured. So you got to think, look into that too. It's going to be easier to qualify for a 30-year mortgage as opposed to a 15-year, because with a 30-year, you're spreading it out longer, so your debt to income ratio would play better in your favor on a 30-year as opposed to a 15-year. Some of the cons is you may get a higher interest rate because it's 30 years, so you're more riskier in the eyes of the lender. So with a 15 year may get less of an interest rate, 30 you're going to get a little bit more. It's going to take you more time to build equity in your home on a 30 year because you're taking longer to pay it off. So based upon the rate of which the market is appreciating, you're going to be taking less time. You're going to be basically on the rate of return on the market. Whereas with a 15 year, because it's less time, you're paying into it more. So your equity is building more because you're paying off more principal as opposed to a 30 year. So it depends between a 15 and 30. It depends upon your financial situation, what you're trying to accomplish. Is this your first, second, third, fourth, fifth home? Is this an investment property you're going to buy? Do you want to buy the property to keep it long term and possibly pass it on to your kids or your, generation to generation? What are you looking to do will determine if you should do a 30 year and a 15 year. Maybe it's an investment property and you're getting enough income from this investment property to be able to afford a 15 year mortgage because the mortgage payment is not coming out of your pocket. That's one way of looking at it. Whereas if you're buying your first time home and you have to pay the mortgage from your pocket, you don't want to pay too much. You want to have reserves. You don't want to be house poor. So a 30 year mortgage may be your better fit. But either way, both mortgages are good. They both all have good upsides and good downsides. For most first time home buyers are going to go with a 30 year mortgage. Investors are probably going to do 30 or 15 years. If you're selling a home to buy another home and you have a huge down payment, you may want to go with a 15 year mortgage because you just want to pay it off faster. There are a lot of tricks also in paying off a regular 30 year mortgage though, like putting certain money towards your principal each month. One of the great ways of paying off a 30 year mortgage is paying the exact principal ahead of time, which means if your mortgage payment is say $2,000 a month, and after $2,000, $334.15, I hope I remember that number, $334.15 is what's going towards the principal. Then what you do, let's say we're in September. So in September, you're going to do your regular mortgage payment and you're going to add an additional $334.15. And you're going to tell the bank this, you're paying the principal for October, right? Which means they can't charge interest in October. So that helps you to pay your mortgage off faster. So if every month you pay the exact principal amount for the month ahead of you, then you would not get that interest, and then that would also help you to pay the mortgage off. So that's one great way. Another way of I've heard stories of making an additional monthly payment once a year. Not sure how that works, but that is also one way of doing it. But what you're trying to do is save an interest. So paying the principal amount, you always, whatever amount of money you're putting towards your mortgage in addition to the monthly payment, you want to make sure you let the bank know that you want that to go towards your principal. Because if you don't, it's just going to put it towards the interest. So if you're paying 1 month's principal at a time in addition to your monthly mortgage payment, you need to call the bank and say, hey, I'm sending this additional $331.34. I want this to be applied to my principal, not to my interest. And I'm just going to pay my regular mortgage payment. But either way, a 30 or 15 year mortgage can work. You could do the same thing with a 15 year mortgage and paying off the mortgage even faster. But it depends upon what your end goal is.
Need to buy or sell fast? Make one call, that's all. And put our 23 years of experience to work for you. Gift Group Sells Homes is the way to go. Call for 07-791-4713.
Some people don't mind paying a regular monthly mortgage. They figure they got to pay rent or they got to pay some kind of monthly expense, so they don't care if it's a 30 year or 15 year. Other people don't want to pay the bank twice the interest, so they want to do a 15 year. So it all depends. Anyway, thank you so much for listening, guys. Be sure to like our page. Click on the notification bell to know when we are about to, every time we post a new video. Thank you so much for listening. I will see you on the next one.
Need to buy or sell fast? Make one call, that's all. And put our 23 years of experience to work for you. Gift Group Sells Homes is the way to go. Call for 07-791-4713.